Hey traders, Raghee here, and I thought something that we could do here in the free video is talk about the measuring stick by which I look at pullbacks and retracement and follow through, and this idea that we don't ever want to be subjective about what a market's capable of doing. Rather, we want to run it by a historical volatility type measurement. Now, this is data that I've used in the Forex markets for, 10, 12, probably close to 15 years now. And the data is a volatility analysis data that looks back at 6 months of behavior, either on a certain day or a certain slice of day, a certain hour of the day. Now, the idea, and the reason I use this, and I've developed some indicators using this data, the reason I'm sharing this with you is let's talk about whether or not today's sell-off really involved any kind of panic, right? I mean, right now, I think we're always wondering, is this the shoe to drop? Is this now when the market sort of comes to its senses on the macroeconomic picture? Is this where the Federal Reserve no longer can talk the market up and print the market up and whatever else we're seeing? Is this when the market's going to see weak data as being negative to the economy? Or is it still going to be a catalyst for the market anticipating the Fed and the Treasury and, support for the equities, right? At what point does the bubble burst? So number one, nobody knows when the bubble bursts. There are some signs of when the bubble bursts. There are some signals, and maybe we can talk about that in an upcoming free video. But let's talk about the measuring stick. Today's range, and I'm going to use not the 9:30 to 4, but I'm going to use the entire session. This is the Thinkorswim platform, and you'll see the range today for the S&P was 89.5 points. So I run 89.5 points by what I would typically see on a Friday in the S&P. Well, notice we're not even above the 68% probability high level. I think that's pretty significant. Is there panic in this move? I don't even think it's close. I don't even think it's a conversation. Not at all. We would have to be above this read. We'd have to be somewhere above 92 points. Okay, and we're not there. I mean, yes, it's above the average. This is your average right here. It is above the average, but I'd hardly call it a panic sell-off. All right, well, that's the S&P. You might say, well, Rog, what about the Nasdaq? We know what some of the advertising concerns surrounding Facebook and even some of the contagion into Google and Twitter. We know what that did to Facebook. Facebook had almost a 2 times historical daily price movement range sell-off, but did the Nasdaq really move outside of the average of about 230 to 300 points? Well, let's take a look. So we head on over to the NQ, and this is how I understand whether panic is really hitting the market. Take a look at the Nasdaq. Number one, we are barely at the 21 exponential moving average. We have barely retraced to that shallow EMA. I mean, it might have grazed it. That's about it. Today's move was a whopping 296 points. Considering Facebook's move lower, considering Google also accompanying that move, the fact that the Nasdaq hardly got to, let's go back on over here, the fact that the Nasdaq hardly even got to 300 points, it's pretty much sitting at its 68% probability, is pretty telling. I do not believe in any way this is panic, because if I were to put the ruler of the historical price movement range up against the NAS, the low end of the ruler says 150 points. The middle of the ruler is about 275 points, and the upper end of the ruler is 300. We were at 296. Again, panic should exceed not just 300, but let's be more specific. Panic should exceed 350. And if we were even looking at another level of panic, that number would exceed 350 plus another 130. So I would need a total of 350, that's the daily price movement range for the high for the week, plus another 130. So until I get to about 480 points, I'm not really thinking the Nasdaq's doing anything that unusual. Yes, it's a significant move, but it's not outside of historical norms. Therefore, it's not sort of breaking the meter, if you will. Now, Facebook is a significant move, and I find Facebook's move to be unsustainable. What do I mean by that? Facebook is probably not going to have another, 17 or 18 point day sell-off. What was today? what was the range on Facebook today? 1769, almost 18 points, 17 and a half points. That was almost twice the daily price movement range. I'm going to be looking, so I'm going to tell you guys straight up, I'm going to be looking Monday for slightly lower lows, and then I'm going to be buying some calls in Facebook. All right, that's an exhaustive move. Had we moved on this news, maybe only 7 or 8 points, I would have thought, yeah, there's a little bit more Facebook could sell off unless Facebook and Zucks can kind of change the tide of sentiment over the weekend. I'd be looking for something at a minimum of 9 points, right? But because we printed 17, what was it, 6, whatever it was, that's pretty exhaustive. I don't find that sustainable. So on Monday, after this big down candle, I'm thinking we might put a slightly lower low, and then we'll put in a minor low pattern. Okay, so heads up for that next week. I hope this helps. Understand the measuring stick of the markets you are trading. Put a historical volatility measuring stick by that market. Understand better what it typically does. It'll give you far better understanding of what's most likely to occur after moves like we saw today. All right. In the premium video, we're going to talk a little bit more about the bank stress test triggered sell-off and whether or not we're really seeing signs of dramatic de-risking going into the end of the month, and a whole lot more. All right, gang, I'll see you in the next update.